Okay, folks, this is Coach Mike. Going to start out with our focus group watch list and spreadsheet for the upcoming week. One thing you'll see on it this week is I've added Apple to it, but I want to tell you I don't really plan on getting into the trades yet with Apple. I wanted to add it to the spreadsheet so you could start looking at uh, my drawings, my charts, kind of get used to it, and also understand what it is I'm looking for. There's actually two things to answer that question of what it is I'm looking for. First, and most important is January 27th, after hours earnings. I talked last week a lot about how I was kind of waiting until stocks get through earnings to start picking them up in waves as they report their earnings. So, financial stocks, a lot of them reported this past week. That's going to probably be a major focus in the chat room this week. But as far as Apple goes, here you go with my weekly chart. We did fail the prior weekly swing low point, but you remember I've been talking about, that area between 101.28 and 103.30, and our weekly swing point is right there at 102.50. I just want you to be aware of that being the point where I would be interested in something. But, with Apple and earnings, premiums are inflated for anything expiring after the earnings. So we're going to kind of chill out and wait for a little bit. Um, Over to the daily chart, one thing I want you to kind of be aware of here is that your daily chart on Friday actually closed below the prior swing low point. That could have been an entry point if we were already trading for that. But, again, I'm looking for that 103.30 area on the daily to see how we do basically in this range so that we can start our Apple trades with the focus group at a time where it's more probable to get large gains, at least on our first series of trading. But the swing points, as you can see them, the different highs are marked, the lows are marked. This area right here from that consolidation, that begins the range of where I'll be looking for Apple to come down. Basically, we got to get through this week, and then Monday of the following week, we got earnings, so we're good. Gonna go over really quick to my 60-minute chart on Apple. Again, not really looking for a trade for this week for the focus group, just wanting to familiarize you with the chart and the swing points. As you see, we kind of double bottomed on a swing point on Friday with Apple. And with that being said, could make an up move. I would look for that swing low to be retested. And after the lower high made, you can see where it dropped from here, it went up. These highs are lower than this high. So I would still assume that we could go lower. It's just that we don't have to go lower instantly. You can make an up move and still be in a bearish trend or whatnot, or still be bearish overall on the chart. So just so you can kind of identify with my chart and how I have it set up to give the possibilities of what we're trading, how we're trading, how we'll be charting. That's what I want you to kind of focus on at this point in time. Okay, now moving over to Goldman Sachs. I don't trade Goldman Sachs via swing points, but I use them on the weekly chart especially to kind of guide my trades. Through this entire up series over the past year, we never broke above a swing high point and closed back below it until not this past week. It was actually the week before. Before the earnings even happened, it kind of said, hey, I'm probably going to go lower. Well, you see what it did is it actually came and hit another swing high point. It kind of is really close to the swing low point here. I actually had a target area that it hit, and I actually mistakenly didn't have it on a prior chart, which was a mess up, or we would have had one other puts trade. But looking at this and where it's at right now is there's actually a possibility if you hold this swing point here that we make a upwards move. So if we do see a little bit of an upwards move being made, because let's not kid ourselves. They missed Wall Street expectations. They didn't do that poorly, but it was kind of similar to what we saw back in early 2014, where on the earnings you fell, you came up, you made a lower high, and then fell again. That would kind of replicate what we saw earlier last year. Now you also have to say, if you're going to talk about that, well, you had the big down week and then you had two little down weeks before you really started moving up. So this is something we might not even look to get a trade on right away for those 185 calls. But if we do drop below the 176.91, which is this close right here, if we drop below 176.91, we might just look for the 220, 170 puts for the drop into this area, because that would kind of replicate what I was showing back here, where you kind of had two smaller continuation weeks and get us a little bit of a boost rather than just sitting on our hands and doing nothing. I'm going to go over to the daily chart for Goldman Sachs. Right here we go. Now, this daily chart, I used this low right here from January 6th, this high right here from January 9th, and then our low from Friday. One thing I want to tell you is you're right in the middle of it with a 181.44 upside Fibonacci target. That means we're not necessarily going to buy off of this. But if it did kind of come down and hold this low area and start to make a move up, if we could get into some 180 calls for February 6th, something February 6th, because I wouldn't be expecting more than like literally a couple days of up move. Something more to replicate this right here where it was just boom, boom. So we would take that to that 181.44 target if we got the opportunity. The other thing I put on here, and there was no new trade off of it, but you do have a little bit of a W pattern on your 60-minute chart. And based on the Fibonacci's with this low, high, and then this low, it might get you up to 179.18. To me, that's personally just not worth trading. I think the big thing to look for in this upcoming week, and I'll go back to the weekly chart to discuss it, is whether or not we fail this swing point. If we fail this swing point, we could probably fall another $5 to $7. Not a big move at this point, but remember, you're already into the swing. We took profit on some puts. Our calls aren't doing too good, and one of them expired. But, we wouldn't be making a lot of plays for just a little bit more of a drop. That's one thing you have to understand. We might make a trade for a little bit more of a drop, but in reality right here, we need to allow the next swing to set up. I will tell you this, I don't think it's going to go straight down all the way down here to 90 bucks without making an up move at some time first. So we have to understand that because it's already into a down move, we have to wait for an up move to present itself to start trading that, and then to whip it around, because at this point we would expect a lower high, and to take advantage of that lower high to get a new swing on the shorts. So that's what I'm looking at for Goldman Sachs here with my focus group spreadsheet for the upcoming week. I do think that there's a couple trades we can make on it. Now, what I will say too is, the markets are closed Monday. On Tuesday, if we get through Tuesday and a trade really doesn't present itself for the focus group, what I might end up doing is putting out a 50-50 trade for Apple, like on Wednesday or something, just, for the week. It might even be something we use the 15-minute chart for, just to give the focus group account a little bit of a boost. But it would really, really, really be something that would have to present itself really well for me to want to do that. So, we're going to have different stocks with earnings this week, more of them that will be the following week, as we get into a lot of the heavier with like technology and stuff. But, the financial stocks, I think we got to work on letting them develop into their next move so we can prepare to trade that next move. And because Goldman Sachs is a financial stock, that's where some focus needs to be. There's no guarantee it'll happen right away, but that's because we have the data. We do have the earnings out now. We have something to base the entire next quarter off of. And I think that's what we need to kind of work into is setting up and making sure we get a little better setup on our next set of swings than what we did on this last one.